In this video, we're going to be talking about one of our primary reversal patterns, the ascending and descending channel, right? Title of the video should just be called channels. But the ascending and descending channels are very, very vital patterns because they essentially give us a signal as to when the market is most likely going to turn around, or this is when you should be looking to close your trade because the market could be turning around after this pattern forms and plays out, right? So essentially, when we talk about this, there are going to be three different types of entries. You're going to have your high risk entry, your medium risk entry, and your low risk entry. And those actually occur in the order that I just explained it, right? High, medium, low risk. You'll see the high before you see the medium. You'll see the medium before you see the low, right? If you want a low risk entry where it's not really a high probability that price could continue to scale in the opposite direction, you need to be willing to wait for that more solid setup. You need to be willing to wait for the confirmations to come. But that will make a lot more sense as I explain them. But the first pattern that I want to talk about is the ascending channel, right? So ascending channel, pretty much like every pattern that we start off with, starts with the impulse going in one direction, right? And particularly for the ascending channel, we need an impulse that goes in an upward direction. So we need a bullish impulse before this pattern occurs, right? And like with our patterns, we typically want them to have corrective movement moving in the opposite direction of the market or of the impulse. Okay, but with our channels, at least our ascending and descending channels, we want them to move in the same direction as the impulse in a corrective fashion. So what that means is we're having small candles moving back and forth, but overall they're still moving in the same direction as this impulse. Overall, it's collectively moving up, just like the impulse moved up. Okay, and then what that forms is a upward slanted rectangle, essentially. All right, pretty much like that. Now, with that upward moving rectangle, we have three entry opportunities. Our first entry opportunity is actually going to be at the top of this channel, right there. Okay. Every time price hits the top of this channel, it's a high risk entry opportunity. Once you recognize the channel, and the channel is actually defined when you have two lows and two highs, or two peaks and two valleys, right? So we have 1, 2 peaks, 1, 2 peaks. So at this point, after this third one here, that's when you can actually start taking those high risk entries. Now, a rule in the ascending channel or in the channels period, we'll say the ascending channel, if you know the ascending channel means start looking for sell opportunities, the market's looking to turn around. That's what this pattern means. If you know that, that means we're never buying at the bottom of this channel. Never, because eventually price is going to break out to the downside. Okay, and if you're caught in a buy here, or let's say you buy here thinking the market's going to go back up, and then the market just continues down, you pretty much just got, it's an easy loss to take, right? And you missed out on your sell opportunity. So high risk entry at the top of the channel. The reason it's high risk is because price can continue scaling up. We don't really know exactly when price is going to turn around. And that is your high risk entry. Now your medium risk entry on the ascending channel is an impulse within the channel, and most likely you're going to see this on a lower time frame. And following that impulse down, you get a correction, small correction, and you look for all your confirmations like you usually do, like a regular setup, and you look for that sell. Okay, and you're looking for the sell to break out. So this is your medium risk entry, and then your safety entry is obviously a break of this channel, an impulsive break of the channel, then a pattern forming after that. Once that pattern forms, you're looking for all your confirmations, right? And looking to sell it. All right, so it's pretty easy. And in the next few videos, you will have the full list of all the confirmations. And I will again say it because I said in the last one, confirmation is impulse, your pattern, patterns reach the kill zone's within the Fibonacci level, and then you finally get your JCP. Once you have that, that means enter, pretty much. Okay, but yeah. So here at the top of the channel, high risk entries. Here's a medium risk entry, and here is your safety entry. Okay. So let's go ahead and find an example here. Now, most often what you want to do, you want to look for these patterns, or I'll say anticipate these patterns to actually occur when you're in major supply and demand areas. Okay. If you go back and review the supply and demand lesson, if you look at that, in those zones, that's where you want to look for these patterns at. Okay, let's see if we can find any on the daily. I just picked 2 random supply and demand zones. There's actually one here. We can see that we have, oh, my fault, we're looking at ascending channel, not descending. So if we're looking for ascending, we're looking for an impulse up and looking for a corrective pattern there. Let's go to the 1 hour to see that better. There's a nice one there. Yeah, it's the best one, at least right now. Okay, so here we get an impulse going up, and then following that impulse going up, we have corrective movement continuing in this upward direction, forming an ascending channel. Okay. Now this one doesn't give us all of our entries. We do have a medium risk entry here. If we go to a lower time frame, there's an impulse there, correction, possible sell opportunity. But for the correction here, we see price just formed a larger pattern on the higher time frame, a rectangle. Let's see if I can find a better example. This one is actually pretty good. Okay. Yeah, this is way clearer. Let's go to the 4 hour. And that should be nice. So here we can see that we have an impulse going straight up. And then we got small candles moving back and forth pretty much. It's not very strong like the impulse was. That's when we notice our corrective movement has begun. And the corrective movement overall is continuing up. Okay, and forming this ascending channel. Okay, if you just connect the wicks, it is still labeled an ascending channel. Go to FinVids, I believe they call this an ascending broadening channel. But to keep it simple, like you can just call it an ascending channel pretty much, right? But here, you can see your high risk entries at the top of this channel here. Okay, and if you look at the confirmations, 1, you have an ascending channel telling you look for sell. 2, you're at the top for a high risk entry. And 3, there's a possible supply zone up here. And if you have a major supply zone telling you to sell, a pattern telling you to sell, and there's high risk opportunity entry, those are pretty much your confirmations for the high risk entry, right? When it comes to the medium risk entry, you're gonna have a lot more confirmations. Let me set that out and go to replay. I'm gonna come here so I'm able to zoom in and show you guys. Okay, so here you can see you got an impulse coming down, and then you have this flat pattern here, which is a continuation pattern to the downside, and we can see that price actually played out and gave us that move. Now following that, we got after our medium risk entry, which you had 3 opportunities to enter there. You have an impulse, a pattern, it's in a kill zone, Fibonacci level looks like the 61.8, and then you would look for a JCP. Okay, and that continuation. Let's go to the 4 hour one more time. Now on the 4 hour time frame, the pattern, the safety entry is a little bit larger than usual, honestly. So we have an impulse coming down, a very strong impulse. The bigger the impulse, the bigger the correction, right? That should be something that's burned in your head. The bigger your impulse is, the bigger you should expect your pattern to be. Okay, you basically, as you look at the market more, it's going to be a whole lot easier to say, is this pattern significant enough for this impulse that we just had, right? Because I remember making this mistake a lot when I first started off using this strategy. I would have this huge impulse and I see this little mini flag. I'm like, okay, this is my opportunity to sell, get in and look for that sell. But when I compare it to this impulse, it's not really that significant. It's a very, very small pullback. It's not significant enough for this pattern, or not for this pattern, but for this impulse. So what price actually ended up doing is forming a larger pattern over an extended period of time, which obviously requires a lot of patience. But if you have the patience, it'll give you a lot more opportunities, and you won't be rushing to enter a trade earlier than what you should. And if you can recognize this, you may be able to capitalize off of entering multiple times here at the top of this pattern. Okay. Now, I'm not going to teach that specifically, but if you go through and back test and figure out a way to do that, it's just an opportunity for you to actually earn a little extra income on it. But and here's your safety entry. You have your impulse, your flat pattern, continuation down. So pretty simple. Now, one thing I will say, let's say you have this pattern here, like on the 4-hour time frame, you have this flat pattern. On a lower time frame, if you see prices rejecting the top of this pattern, or basically a top of a resistance area, it's probably a good idea to go to a lower time frame, because you could potentially find more ascending channels. So here I can recognize we have one here, and let's see if I can go to, we're back in 2020, so yeah, I can go to the 15-minute, and if we look here, we can see we have an impulse going up, and we have corrective movement following that right here, which formed our ascending channel. And then we got to move down. If we look back when it came back up here, we have an impulse up, we have corrective movement moving in an upward direction, forming another ascending channel, giving us this move down. And this is your opportunity to be able to day trade while you're waiting for those swing trading setups on the higher time frame. So if you remember, we're looking at the inside of a 4-hour rectangular pattern or flat pattern. And at the top of this pattern, you're noticing these ascending channels actually happening there and bring the market to the downside. Okay. Now, descending channels are really easy. It's really similar to the ascending channels, just upside down. Okay, you get your impulse down, you have correct movement moving in the same direction as that impulse. Your high risk entry is going to be at the bottom as opposed to the top, because we're looking for the market to reverse and go up. Right? With these channels, we're looking for it to go the opposite direction of the impulse. Eventually, the actual move that we're looking at is for it to go the opposite direction of the impulse. So high risk is at the bottom of the channel. Every time price touches the bottom of the channel. Medium risk is an impulse and correction within the channel. And then our safety risk is actually waiting for it to break out of the channel, give us a pattern here, and then look for it to go up, right? In this one, we're looking for all our confirmations to be met, same as our medium risk entry, but medium risk entry is just medium risk because it's still within the channel and it hasn't actually made a actual breakout, at least at that point in time. So let's go ahead and see if we can find a few examples of that. I actually saw one while we were looking for descending or ascending channels. But here, you can see that we have a strong impulse coming down. And then after that strong impulse coming down, we have corrective movement moving in the same direction as the impulse. This is slanted downwards. It's not slanted up. It's not going the opposite direction. It's forming a slanted rectangular pattern in the same direction as the impulse. Okay. So at the bottom of this, we're looking for our high risk entries, and typically at those levels, you want to look for a single Japanese candlestick reversal patterns, or simply an engulfing candle. Engulfing candle is pretty much always a pretty good go-to if you're waiting for confirmation for a reversal or for a move to begin. Okay, and if we look deeper inside of it, you can see we have an impulse there, we have a correction here, or a pattern here. It'd be a whole lot clearer on the 5-minute time frame, or you'd be able to see at least the legs of the pattern a little bit better on the 5-minute time frame. But nevertheless, it's there. And we take our trend line and we see price broke out. So we can see that we have our high risk entry down there, our medium risk entry here, and then our safety risk, which actually I do not like this too much. Pattern's not that clear, I'd say, or not that defined. But I would consider this more of an expanding triangle. But essentially it's basically a retest, but based off the rules of expanding triangles, usually expanding triangles start off with an ascending channel, which this one kind of does start off with an ascending channel. Then it makes a strong leg down, and it'll come typically to a deep retracement level, 61.8, 78.6, or 88.6, and then look for a push up off of a kill zone, just simply retesting this area. Okay, if that doesn't make sense, I recommend going back to the expanding triangle video and also going to the kill zone video so that you can get a pretty good idea of what I'm referring to when I'm saying it's retesting this kill zone. And those kill zones are basically your entry levels. And if you look at this or go back to the first lesson, you can also see this retest doesn't really go past the bottom of the impulse. Okay, but honestly, personally, I wouldn't even take that trade unless I'm using my other strategy. And the reason is because it's not too corrective movement here. It's pretty aggressive, but it still does meet all the requirements, but it's not as corrective as I would like it to be. But usually you would look for a pattern here, or typically you would ideally like to see a clear cut pattern here, meeting all your requirements, and then looking for that buy opportunity there. So that is your descending channel, and a really good way to see these pretty easily, because these do happen a lot, and it's going to be really good really good to utilize and pretty easy to capitalize off it when you really understand it or see it pretty easily, because they happen all the time. And when you see them, you can say, okay, here's an ascending channel, I could take my high risk entry, or I could wait for this safety entry here, or I could wait for the break in a pattern here. But if you go back to the higher time frame, we're still in that 4-hour rectangular pattern. Okay, so let's say, okay, I see this ascending channel. Let's say, okay, I'm gonna wait for my medium risk entry because I want a pretty early entry. I don't really want to wait too long for the safety entry because it may go down further than I would like it to. Then you're able to set your stop loss above this impulse or above the Fibonacci level. And right here you have an 18 pip stop loss. But if we go back to the 4-hour time frame, we know, okay, there's a bigger move here because we're within a larger pattern. And you can potentially get, let's not be too ambitious, but you could get a 5-to-1 opportunity here, knowing that, okay, price could come down to the bottom of this pattern again, or you can say, okay, this may be the breakout. I'm willing to hold a little bit longer and possibly get an 8-to-1 in this situation. All right, but that's completely up to you. Of course, you're gonna gain more confidence with what you do in that situation based off back testing, reviewing these patterns, and seeing it play out a lot more, actually utilizing it. Because simply studying and watching these videos isn't going to help you to get to the point where you're saying, this is what I'm going to do in this situation. It's not really going to help you develop your trading plan. This is basically a system. Your trading plan is developed by yourself. I can and will give you my trading plan, but you're not going to have trust in it as much as I have trust in it, because I've tested it a lot. I've gone through the ups and downs. I've been through the hurt and pain with it, and I understand when this happens, this is what I need to do to make an adjustment so that I can continue to trade, so I can continue to progress and grow my equity curve or whatever my goals may be. But yeah, so those are your ascending descending channels. Again, I will say do a little bit extra work on this as opposed to the other patterns, because these do happen a lot and these are a very vital pattern, because it will give you that signal to say, hey, stop selling, look for buys, stop buying, start looking for sales. But so that's what I'm saying. Find 10 different ascending channels, 10 different descending channels on 5 different pairs, right? Okay. Again, this 5 on 5 isn't too much. If you want to really challenge yourself, I strongly recommend actually finding 10 ascending channels and 10 descending channels on 25 different charts. That's a total of about 500 patterns. That's really going to help you see these very, very easily, and there really won't be a question as to, oh, is this going to come down and form a flag, or is this going to do this or that? It's going to clear up the chart and train your eyes a whole lot better for those situations. But again, if you have any questions on this, go ahead and message me, and I'll do my best to answer as soon as possible. And hope this helps. Catch you guys soon.